had to be here today. And especially with so much happening, Friday, Saturday, Sunday, in the markets and just all sorts of things occurring, could not let you, could not let you miss out. So, Deborah, just me, my wife, and my two dogs. So that's it. So, just that's all that's here. So no living cleaning ladies or cleaning people or anything like that yet. Yet one of these days, maybe. Now, really quickly before we jump into everything, gotta let you guys know. Um, I am not a commodity trading advisor, simply here to show you opportunity. What you do with that opportunity is all up to you, as well as you got to be aware of any and all risk, understand that risk, be willing to accept that risk, take on that risk, and be willing to, if you take any trades from here, which, how many of y'all have taken some of these trades? OKLO, we talked about that this week, last week, or actually 2 weeks ago. And it was up to $65 or something like that from 32 when we called it. SMR, there's another one. We called Disney, we called SPY. Love it, guys. Love it, love it, love it. We'll be talking about those. I got a few more trades that I'm going to be sending you as well. So if you take any of those trades, just know you're doing so of and on your own volition. Now, really quickly, for those of you, if it's your first time here, first and foremost, welcome. Okay, welcome to you all. If you don't know who I am, my name is James Bishop. I've been in trading education for 15 plus years. I'm the owner and founder of a managed fund where we manage accounts for individuals. Um, I'm licensed to do so. I also have a retirement and estate planning company. I help people retire tax free. I help people grow wealth tax free. I help people pass on wealth, as well as get guaranteed incomes for life. That's what I do. And it's what my biggest thing I do is. And I also have my MBA in finance and global portfolio management. And I am finishing up my doctorate in finance and economics as well. Now, a couple of quick housekeeping items really quickly. Next week, though, well, there's a couple of weeks where we're not going to have sessions, okay? Couple of weeks where we're not going to have sessions. June 22nd. Mark that down, June 22nd. We are not going to be having a webinar on June 22nd. It's my in law's 40th wedding anniversary. And, well, if you don't know this, it's like I always say, where there's a will, I want to be in it. So I'm going to be showing up to their 40th wedding anniversary as the best son-in-law they have. And I'm the only son-in-law, so I got to be the best, right? My wife is their only daughter, so I have to be the best son-in-law. And they got a will, and I want to be in it, so I'll be there for that. And then on July 6th, I will be flying back from Ireland. And so I won't be having a session then as well. So you guys can take off July 4th weekend and be happy. And just note that you guys have those down. And then a couple other things I want to share. One is our Discord channel. Okay. So I'm going to send you guys a couple of invites here. So I created, and this link will only last for 7 days. You can see it says your invite link expires in 7 days. So I'm going to send this out to everybody right now. That Discord, go ahead, click it, and join. Okay. That's where I'll post recordings. I'll post, trade opportunities, things like that. Now, the other thing, I'm also gonna have you join a separate Discord channel as well. This one, what this channel allows me to do is I can go ahead and go live and like literally during a fundamental announcement, I can go live, I can share my screen, I can talk with you guys, I can share the trading ideas. You can see me take a live trade, things like that. Um, Someone said you don't like Telegram. Well, just to give you a little inside baseball, Telegram, there's been a lot of issues where people are copying other people's telegrams and they're fake and they're posing as Tyson or others trying to get people to spend money, and I just don't want a part of that. And then I also really like this feature. You can't do this in Telegram. I literally, like right now, if I wanted to, if I click on trade announcements, I could hit unmute and I'm going live right now in the room. I can share my screen as well. I can share my screen in in the actual Telegram so people can see it, they can hear me. We could talk together as well. It's really, really cool to do that. And that way we can start like if people want to, see a trade or if there's like a major fundamental news announcement, what I plan to do with this is I'll go into the regular Sunday service sessions TNT and I'll say about to go live and we'll do like a live session right there in Discord. It's amazing. You can also download Discord on your phone, by the way. You can get it on your phone as well. So use both of these links. Okay. The top link is to get in the channel, the second link is to get on the trade announcements. Make sure you turn your alerts on because just for my channel, I guess. If you, look, don't turn them on for everybody if you don't want them for everybody. I got some of my friends' channels muted. Let me just be real. But if they're giving me if they're doing good, I'll be participate a little more. So be alert and know that that's a tool and feature that I am planning to use a lot here coming up. All right, so. Uh, just know that so you guys can see that as we come up as well. Let's see. I don't like this format as I do not hear or see anything. Time to session start. Somebody did that at in April. Okay, gotcha. That's weird. No worries. Well, it's um. So whenever we go live, you guys will get an announcement via there, okay? So just so you guys know, that's how that'll work, okay? Let's see. The other is couple of special sessions coming up. The first of which is this Thursday, 4 p.m. Eastern Standard. Let me see here. We're gonna disconnect. So we're out of the Discord now, so it should stop making noises. It's driving me nuts over here. Um, Let me bring this up. So, this week coming up on edit, no, cancel, click this, invitations, edit. Nope, nope. Let's see, copy this link. All right, I just sent everybody a Zoom session. This link will be a little more basically, helping you bulletproof your investing and trading no matter what happens. This is going to be on Thursday at 4 p.m. Eastern. So go ahead and register for that if you want to. And then one more little thing here in about 30 seconds, I'll send you guys as well. Give me about, let's see here. Um, All right, type in done when you got that done and you're registered for that next session. Just so I can see when I get a lot of people that have typed in done, I will, at that point, we'll go to the next one And there'll be last one. Claudio, thank you. Good to see you, Claudio. Um, Deepak, good to see you as well. Eddie, good to see you. Um, let's see. Perfect. All right, last session. So, also coming up, there's a 3-day event that I was able to secure a spot for everybody for. It's going to be Tuesday through Thursday at noon Eastern. You'll be able to see some amazing results. This is from Tyson Clayton and Invest for It. He is doing a fib mastery session, and he's going to be going through 3 days live. Um, so don't worry. Yes, I'm gonna cancel that. Don't worry. The Zoom will only be for this week. And I'm gonna cancel the one on the third. So don't worry about that. This is again only this is exclusive for you guys. You guys get free access to this. It's a 3-day event. Go ahead and you guys can just name, number, email, lock in your spot for this Fib Mastery session as well. Really cool event. So you'll learn a lot about Fibonacci's. You'll learn how he's using fibs, which are slightly different than the way I do. So feel free if you have any questions, there's the link for that. So now let's jump in to um, uh, sorry. Uh, let's jump into the market here. So, in the news. So, first thing I want to do is let's go first before we get into all the crazy news. Factory.com. Let's take a look at what happened last week, major announcement wise, and what do we have on the docket this week, my friends. So, I'm gonna get Discord off real quick. There we go. So last week we had bank lending rate from Japan, final GDP from Japan came in at 0, which was better than the negative GDP they were expecting. China inflation was better than expected there, but the producing index was a lot higher than expected. Their trade balance was good. Their US denominated trade balance was right on target as well. Then we had CPI numbers come in, which is a measure of inflation. So, how many of you are not familiar with what CPI is versus core CPI? Type in a no if you are not familiar with those two. Beautiful. Type in a yes if you are. Okay, good, good, good. Okay, so CPI is a measure of inflation. It stands for Consumer Price Index. What they do is they throw a basket of goods together, including energy and food, in CPI, and they measure the price variance from 1 month to 1 month, 1 year to 1 year, 1 quarter to 1 quarter, and they report this number. Now, there's also the core CPI, which is what that is that removes energy and food. And the reason why it removes energy and food is because the Fed Reserve really does not affect energy and food prices, right? Because OPEC sets oil prices, does it not? Right? Then food prices, I mean, here, let me ask you a very simple question. Let's say I don't know that all the strawberry farms in America got some sort of crazy disease and all the strawberries were had to be thrown away and crops were burned. If you went to the store because your wife was craving strawberries, do you think the cost of strawberries would be lower or higher? Exactly, higher. Did the Fed Reserve affect that price at all? Absolutely not, right? So the reason why I brought that up too, it's kind of funny, is so I am 21 years older than my younger brother. Um, my mom had me when she was 21, and then my two brothers are my mom and my stepdad's. And my youngest brother, when he was born, well, when she was pregnant with him, she craved strawberries. The problem was they lived in Japan at the time, and the price of strawberries in Japan, think it was like $5 to $12 for about six strawberries. Okay. And my mom was going through those like it was nothing, you know? Then that's why I brought that up. Just kind of funny how all that is, right? A buck a berry, that's it. So then we also had 10-year bond, and that was actually, not as good as they thought. The federal budget, way out of balance. We already know that, which that is something that I'm going to stand on for a second. We'll talk about that. um, we had GDP out of the UK that was way lower than forecasted, and mainly due to trade. We had PPI index, which is the producer index, and if that number is low, that means the cost of goods is going to go up. Okay, that means inflation. And look, it's partly to do with tariffs. And even when we onshore manufacturing, if we onshore manufacturing, I'm going to explain that in a second. Even if we are able to do that, know, okay, that we're still going to have to import raw materials because we don't mine copper here. We don't have all of those things that we have in other countries. So that means we'll have to pay them and have to pay a tariff on them. And that means that the throughput cost of that good will be higher. Now, I was listening to he was actually under the first Trump presidency. He was the head economist for the president. And he had an amazing interview the other day. And I ended up losing it because my computer reset. You know how that is. And I cannot find it. But had an amazing interview. And he was talking about a couple of things. The tariffs are a way to raise taxes without creating a tax hike, right? Because tariffs are in they're going to be passed through, right? No company is going to eat a tariff. Like, here's a great example. Chevy says they're moving production of the Blazer from Mexico to the United States. Well, the unit labor cost for one vehicle in Mexico is 1 hour of labor to produce one vehicle is about $6. When it moves to the US, it's going to go to $70. Now, do you think that Chevy, just out of the goodness of their heart, is going to eat that cost? Or do you think the price of their vehicle is going to go up? And so, because of things like that, right? We're going to see higher costs of goods, just period. And that's a way to tax, it's almost like a consumption tax. The more you consume, the more you pay, and so on and so forth. Um, huh, you'd hope not, right? It's not going to go from hopefully 40K to 400K, but it could go from 40K to 80K, right? They just make less vehicles. And then some new vehicle manufacturer will come in and fill in at the extremely low cost. It just is what it is. Or they automate their plants, with robots and things like that, and get rid of employees, and then you're just paying electricity, basically. And your unit labor cost goes down because you can work a robot 24 hours a day. So there's that aspect of it as well. But I thought that was a very interesting take by that economist on, it's a way to raise taxes without raising taxes, and that makes sense. Um, and then the other thing that was pointed out, and this was another just like a glancing comment in a CNBC interview on like Squawk Box or Squawk in the Morning or something like that. And this individual said that we're hearing a lot of companies say, hey, we're going to open a plant and we're going to bring manufacturing. So they get this exempt status on the tariff side, right? We're going to open a plant, we're going to onshore manufacturing. But you know what's missing from there is the timeline at which it's going to happen. So how long can they kick the can down the road? It could be 1,000 years from now, right? It doesn't matter. And so that's just one thing to keep your eyes out for to see, hey, let's see what actually occurs. Now, coming up this week, announcement wise, we have Bank of Japan monetary policy statement. They're expected to hold rates. Then we have retail sales number. Yep, takes about 3 years to open a plant, 3 years to from the ground up have to open a plant or retool a plant takes about 2.5 years. Then hiring and training, that's another year to 2 years. So you're looking at 5 years before you start really producing it at any sort of capacity. Now, David said Detroit is full of closed plants. David, you're correct. There are several closed plants in Detroit. However, some of them have been closed so long that the cost of reopening them maybe it's like one of those really dilapidated homes you see. It may just be easier to bulldozer over and start from the dirt up. That's it's a thing that you have to take into consideration is cost, right? Return on invested capital. Um, but back to announcements on Tuesday, we'll have core retail sales as well. Now, that is a measure of that's a recessionary measure there. Okay, so Tuesday, expect the market to be extremely volatile. If retail sales and core retail sales are big misses and they're down, that is not going to be good for the economy or the market. Just FYI, I'm going to go ahead and predict you on that one. We have the FOMC federal funds rate. Okay, June 18th. That is supposed to come out this Wednesday, 2 p.m. Okay, 2 p.m. Let's see. And so we have federal funds rate. They're expected to hold. Let's see what the watch group is this. Standard of living continues. Without tariffs, then U.S. standard of living continue. Eddie, yes. Let's see. Let me go here. Let's go down. So we're expected 96.9% chance of the Fed holds rates. And that's more than likely. U.S. standard of living to decline to China and Mexico. Eddie, not really. Let's see. And we can talk about that on a different way. Because what most people don't actually understand what's actually happening there. And we've actually had this happen before. If you go look up the Smoot-Hawley Act of 1927 and see what it did to the economy and to trade, and it was the exact same scenario. We deported people from the United States. We did a 10% universal tariff and then additional tariffs on 200,000 goods. Um, and it's just a look, history is a great teacher of what can happen. Let's see. Do you think rates should actually get cut even though they won't be? No, I don't. I do not think the rates should get cut. There's too many unknowns, right? Because Here's what's here's what's worse is if is a wishy-washy Fed, right? If the Fed cuts rates, then they raise rates, then they cut rates, then they raise rates, then they cut rates, all right? Then they raise rates. Um, is is that is the that's one of those things that would not be good and show stability, right? The reason why the Fed cuts rates or raises rates is to control inflation. Okay, the reason why the Fed raises rates is to control inflation. Um, and the reason why they cut rates is because the economy is good and it's rolling and there's inflation is under control. You know, the goal, right, is GDP is 3%, inflation is 2%, and we have a phenomenal economy. That's the goal. Okay? That is the goal. However, right now, because of inflationary measures, because of tariffs, because of the other big thing is what happened in the first 2 quarters of this year that hasn't really happened in the last, I don't know, 40, 50 years has been that there was a mad rush to import and stock. And so there's back stock. And so what we're seeing now at the Port of America, the port in Houston, Philadelphia, all of the port workers are down. They're not having needing for second and third shifts. Port of America is on one shift because they got about 9 ships all in the last 3 months. That can be done by one set of longshoremen. So reducing those blue collar jobs there, okay? Reducing those. And so that means that because of this backstock, that we're not going to import as much. And if we don't import as much and then people slow down on their buying, then we're also going to see prices kind of rise as well. Does that make sense? Give me a wire yes if it does. Okay, perfect. So into that, right? That leads us into all sorts of things. And let me go through some of the comments here. Um, let's see. So the just-in-time inventory is already full enough, eh? Right? Just in time. That's that was a Toyota invention, which is amazing, right? We are more on right now we're on a just in case, right? But why did Apple fly all those iPhones over here? Just in case some tariffs hit. Okay? Why did this happen? Just in case this happened, right? We're not going to pay more for it, right? We got it just in case, okay? Let's see. So, somebody saying, "Hey, we need blue collar jobs here, even if we import raw materials." Absolutely, I agree with you. I 100% agree with you. But if you fail to look at why the U.S. was the leading manufacturer at one point, then we can't really recreate those jobs, if that makes sense. For instance, why was the U.S. the manufacturing hub in the 40 and 50s? Well, think about it. Europe, bombed to hell and back. Japan, bombed to hell and back. China, non-existent. Let's see. Sal. Well, that's not nice, Sal. I don't. Uh, Sal, feel free, buddy. I hope you're doing well. I hope you're doing well, buddy. I hope you have a great day, my friend. And I hope things get better for you. I didn't know you're so bitter. So we're about to go into some trades, Sal. Do you trade at all or no? So, here. You know what? Oh, where'd my chat go? Let me is all right. Hold on. Um, just in case you guys want to know, let me see here. This is what our good buddy Sal is sending me over and over and over and over and over again. So if you guys can't get your comment in, I do apologize. But I'm being lambasted by my man Sal, calling me an asshole for no reason. Who knows, right? Who knows? But hey, I guess he's got nothing better to do here today. Give me 1 second. Let me see. And I'll also be giving you a call here, Sal. Okay. Here we go. Let me, uh, that usually gets him out, right? That usually gets him out just like that. Hey, it is what it is. What can you say, guys? I just, hey, I hope you guys are getting some value out of today. He's out of there now, so we should be good to go. Um, So, hope you guys are getting some value here today. Because I do got some trades that we're gonna go. Oh, he is. He's gone. Trades we're gonna go over. Also, guys, oh, Mervin, I do, buddy. Trust me, I got called worse than that by my mom. Um, so geopolitics, as you guys know, I'm not gonna go too deep into this. The Israel-Iran attacks have happened for a third consecutive day. Um, Thank you, thank you. And look, guys, if you disagree with me, I'm glad that you do. It shows you guys are well informed and you have your own opinions. And I'm just here to present. I try to present as unbiased as I can. I really do like a lot of what's going on in the U.S., but I also understand history and how the down chain effects that could happen. And absolutely. So, Israel, Iran, they're still firing missiles over at each other. Israel U.S. ambassador says Iran's nuclear program has been set back dramatically, but not yet enough. So this could take weeks. Trump talking that on True Social that they need to get a deal done. Um, so, and then Israel has asked Trump to join its efforts in Iran, but White House so far has distanced itself. Um, so, Trump and Putin, uh, they've talked about the Middle East. This is going to be something that is, this is going to be something that is, seriously, seriously a major issue. And we saw the fall of the market, a little bit, but then it recovered right away. Um, I think, quite honestly, this is just, I hate to say this, but it's like more old news that this just continues to occur. And that's why we didn't see such a massive fear reaction. But we're going to look, one of the big reactions that we did see was in oil, right? So I'm going to go, we can look at CL and go oil futures. Um, uh-oh, let me refresh. There we go. I don't know what happened there. So reset. So if we look at CL and we look at oil futures, um, market energy is giving us a buying opportunity on market energy. We do see or hedge fund trender. I apologize. We're above the 200 period moving. We're literally right at all the averages though. Right? Market energy also has it as a buy. So do I think that oil futures will probably continue to be higher? Yes. If I look at them daily, there is, I don't know why it went to a monthly chart. If I look at oil, so daily, we're still in the buying opportunity. We've seen a little bit of a pullback. We're back above all of the moving averages. Market energy is still showing a push up. Maybe what I will probably see is, hold on a second. Give me one quick second, guys. Sorry, did not want to sneeze all up in y'all's ears. So bless me, as I say, as they say. Let's see. So submit done. Perfect. So, what I honestly anticipate is that tomorrow, like overnight and into the morning, we'll probably see this pull back a little bit and then the next rally up because we know this is just going to keep continuing until we see because oil, there's still oil producing nations. However, we also have to understand we get more oil from Guyana, Venezuela, Russia and various other countries than we do just in the Middle East. So that is something else. Let's see. I love that. Have the markets already priced in a potential start to World War III? I don't want to touch that with a 10-foot pole. That's hey, I'd love to talk to you about that though. Let me just tell you this. On an offline, I'd love that conversation. So let me go into a couple of stocks that we've been looking at, and then let's continue. Someone says, "Hey, does Texas play into our oil much still?" Uh, so I will tell you this: I lived in Houston and I golfed with actually one of a major oil producer. We do a lot of refining in Houston, but a lot of our oil we actually export for money. And then guys ready for this one? So when I lived in Texas, so I lived in Houston for 2 years. I lived in East Texas, kind of the east of Dallas for a year. When I got my first electric bill, you'd had to scrape me up off the floor. It was like $344, and I was never experienced like our biggest electric bill in Florida was like $150. And I just was like, what's going on here? Da da da. They actually charge to deliver the electricity to your house and they charge you for what you use. Okay. And they are actually one of the largest producers of wind and solar energy as well. So that's a good question on Texas. So let me pull up some of these stocks that I want you guys to pay attention to in the next coming days. Okay. Um, Oh, I have them listed out somewhere here. So get ready. We're gonna kind of rapid fire some of these. Okay, first, we're gonna take a look at Disney, right? We know we have this trade on Disney that we've been looking at for some time. Fibonacci wise, we had A B C D swing here, an A B C D swing here. The market has left us some major gaps. Okay, some major gaps right now in the market from this point to here and this point to here. I think that we see this gap filled more than likely this week, is what I anticipate, at least the 106 gap. Between this week and next week, I think that we see this gap filled. Um, while they benefited from Abu Dhabi, they benefited from which is their new theme park. They benefited from the subscriber, but they also just paid, another $450 million for the final acquisition of Hulu, and from Warner Brothers, and or was it? I can't remember who sold it to them, but they just finished that final acquisition. That's a lot of cash outlay. Last time they outlaid that much cash, well, the stock cratered. So I think it may be a little bit different, but I still think that the stock needs to get some relief from there. We're at a natural level of support and resistance. So I am anticipating and waiting for an entry to pull back. Okay. To pull back. Let's see. It's interesting. The gap lines up with the same one way back in 2024. Let's see. Oh, like right in here. Yeah, you're right. Right in. Yep. You're very, very much right. Good call there. The other one that we looked at is the darling child of all darling childs, which is good old Tesla. If we look at a daily chart on Tesla, we there's still one major gap left in this, which is down here at 148.09. Look, Tesla, we had a nice run up. However, we're still in the sell zone. We've crossed below the 200 period moving average. We pulled back. We failed to make a new high. We're looking at potentially pushing back down. Do I think it's going to fall the way down here? No, I don't. But I do think there's going to be a really good buying opportunity in Tesla somewhere at the 215 level. Okay, that's where I'm looking for my next buy. If you are an options trader, look for maybe some put action on this, but I would wait until you get another red dot or you see sellers take control. Don't buy when buyers are in control. That makes no sense. Or don't sell when buyers are in control. If we look at the 30-minute chart, sellers are in control there. Now we're going to go into OKLO. That's been our darling for a little bit, right? So, first trade that we called with OKLO was Thursday, this was Friday. So, it had closed right at Wednesday, Thursday. It had closed right at $49 when we first no, that was yeah. So 49 bucks, up to 60.71 at one point. Then Wednesday, Thursday, Friday. We talked about it as well on June 6th, which was last week, when it was at 46 bucks, and it is at, over the next 5 days, it rocked up to 71. It has pulled back. I think we are determined to get another pullback in this. Again, look, if you want to, you have my full support if you want to buy a little position in this, but also look for this stock to come back down into that 40 to 43 region. I do think that that's on the horizon here. Okay, I do think that's on the horizon. And then we're gonna look at LEU, which is Citrus Energy Corporation. We talked about this a couple of weeks ago as well. There we are right in here. We were at 117. We're sitting at 162 right now. Again, these are all nuclear energy plays. Nuclear energy is going to be the energy of the future. Period, point blank. It is. We can go into a whole dissertation about that sometime very, very soon. We do have some very big gaps in here back in 94 and 76, and then one at 127. Here's what I would say. If it comes down to 128-ish, I'd probably start buying the stock. If it comes down to 94, I'd probably start buying the stock. And 76, I probably would start buying the stock. Uranium, right? URA was what we called out as a buy on the ETF. I don't know if did you sell that? Is that what you did? Um, because we called this out on a buy and it's just rocketed higher since we've been talking about it. Now let me go into a couple others. Um, let's see. I really do like CRISPR Therapeutics. As you know, during COVID, they were up over 200 bucks. Okay. So let's talk about why. So CRISPR is actively currently using AI and human genome mapping to help create drugs. Their first two drugs have already passed all clinical trials and are actually making the company money and making them profit. And they are curing sickle cell anemia and one other disease that escapes me. I'm sorry. The sickness is it's not coming to me. But look, this is the future is human genome mapping. That's why they did it back in the 90s is they had the foresight to say, or yeah, it was early 2000 when we mapped the human genome for the first time. I remember reading about the project when I was like what was that, 25 years ago? So I was like in my teens. And I was very big and, I still loved things like that. And so that in and of itself is a massive ordeal that'll lead to this is like a long-term play, right? This is like a wealth building play. Okay. I think that we see this at 46, 47, and then the next place we go from there is up to 54. And I could see this being $100 to $150 stock. Absolutely could. And that's CRSP. Another one, Archer. Okay. Archer Aviation. This is an interesting one, right? This is one of those that this is Kathy Wood brought this up. It's actually in ARKK's biggest holdings. If you don't know who she is, very much a future focused investor. What I think 30 billion of assets under management. But ARKK or ACHR is Archer Aviation. They're building like aero taxis. And while this is a very far out play, the risk in this is $9. If it goes up from, they've been profitable, right? They launched at 10, they shot up to 18, they pulled back to 1, and they're back at $9. So your risk in this is $9, right? And if you can take this to even from 10 to 14, that's a really good play. Like if we go and we were to look at like an option play on this as well, let's say ACHR and just look at an options chain. I mean, for an at the money call, you're paying $1, so $100 for 100 shares. So, I would buy something out for a little bit on this, even if we bought the January 26 calls at $2.73. You're not losing, you're not out, you're not tying up a bunch of capital. And if it converts up to 14, 15, this may be good for some spread trades and things like that as well. Um, Another one that I really love is, and I, full disclosure, own the stock and I am currently trading it, but UNH, United Healthcare. Look, United Healthcare not making money is like, that's foolish to think that it's not going to do that. Okay, that just is what it is. United Healthcare right now is sitting at $313. We know earlier this year or within the last 12 months, it was at 625. Okay. It was at 625. So if we look at United Healthcare, we got a blue dot buy from our HFT that'll tell us that we could buy this. Look, I'll show you my targets on it. Target 1 for me is at 377. Target 2 for me is at 582. 377 and 582. I'll leave you guys to how you play the option, but we still have buyers in control. We're about to break through the lower time frame moving average. So that means our next would be the outer, which would be right at our gap. And then once we break above this, and look, just healthcare expenditure is the largest expenditure for every in the United States. Two-thirds of our GDP is based on healthcare consumption. United Healthcare, if you don't know, go read one of their 10Ks or any healthcare company 10K. They're 100% funded by the government. Then on top of that, they get money for businesses. Then on top of that, they get hospital money. Then on top of that, they get money from us as well. An insurer not making money is more than likely not going to happen. So I think there was just some massive profit taking. Exactly, Chuck. I wish we could get into that racket, you know? So maybe I'll ask ChatGPT how we can do that, Chuck. You in with me? Um, so um, that's that's one that I do love. I think it's a great opportunity for you guys as well. Um and now a couple of people asked me PARR. Let's take a look at that. PARR. So, let's jump into the company itself. Yeah, I love it. Absolutely love it. Love the investment and opportunity in it. 24.49. Could it get back into the 40s? Absolutely. I 100% think that it could. We still have a buy on it on the daily time frame. Buyers are in control. There's no reason not to hold this. So if you, Deborah, I love this one. Can I also give you guys, let's see. Um, Let me also bring up this is gonna be like duh, James, kind of stock, but Google. Okay, so one of the things that I began to look at with Google is their evolution in their technology. The Chromebooks never really caught on, and then the Google Glass that was too ahead of its time, and then all this other crap, it just kind of fell by the wayside. But Google has heavily invested in Gemini, which is their AI, and they're also partnering with Warby Parker to create glasses. They're also coming out with another set of glasses as well. They have a AR VR headset like the Apple Vision Pro. Their phones are better designed and and they can work with OpenAI or Gemini. And when I started to look at that, and they're creating that same kind of encapsulated end-to-end user experience that Apple has. Okay. Um, and so Google is an amazing, amazing company. And I honestly think that they are going to, I will say, I'm going to either be, hey, in 5 years, again, you guys know my comment. I'm either Nostradamus or Nostradamus. But in 5 years, okay, I think that Google will eclipse Apple in all sales and they will actually take market share from Apple unless Apple does something extremely cutting edge. So I could see Tim Cook being out of Apple very soon, and the next people replacing Apple making some bad decisions, and then who knows what happens from there. But and then I also like Google just to fill this gap back up to 204. I mean, that's a $25 gap, you know? Um, so I'm a and look, this is from an Apple fanboy. This is coming from a MacBook Pro. And with my iPhone sitting in front of me, my Apple Watch on my wrist, I got four Apple TVs all around the house. I am a Apple fanboy. But I just think Google will be better. I think Google will eventually be better. Um, so AMD, somebody asked to look at that. AMD, um, they beat earnings. I think Look, I think AMD is probably poised for a little bit of a pullback back into 104, maybe even lower down into 87. They had an incredible run. Great news. Let's take a look at what Wall Streeters are saying. Um, PE ratio. Mm, yeah, not as good as I thought it would be. A lot of debt, heavy, heavy debt. I wonder how that debt is structured. The other thing is, where's their supply chain out of? That's the other thing, right? See, if these companies have to rework their supply chains, then it's going to be, it'll be a little scary. So HP, Oracle, Rambus, where are these? So US, Taiwan. Okay. So I like the fact that their supply chain is in the US, right? Actually, let's do that too. Let's take a look at NVIDIA's supply chain. Where is NVIDIA's supply chain? So US. Look at that. I love it, right? We have to understand that, like where things are coming from them, because you don't want their supply chain to be all over the place and as well. So I think NVIDIA still has a ton of the way to go, to be honest. I think if you don't own NVIDIA, you're doing yourself a disservice. Um, I think you could buy it now. Also think that if you bought it at 123 and you bought some more of it at 109, and you bought a little more of it at 100, you'd be a-okay in my book. Mainly because, as we open up and sell more NVIDIA around the world, more of their chips around the world, it's just going to help bring them more profit. And if they ever get into the data storage side, I think that will be huge. The other companies that I really do like as well is I do like Vertex as well. This is more of a like energy storage company. Um, Good company, not in it yet, just to let you know. And let me see. Let's see. So Codex, this is a private company, so can't really talk about that because it's not investable yet. It's a blockchain company, really interested in them. Been reading a ton about them lately as well, so I'll be looking for them when they go public. We'll also take a quick look at Palantir. Um, Eddie, I appreciate it, man. I really loved your comments too, buddy. Really love your comments. I do as well. So, next week, no session next week, guys. We're about to wrap this up. Just want to remind you again, like I said, 40th, it's my in-laws' 40th wedding anniversary, won't be here. So, we will be skipping next week and moving forward from there. Palantir, look, my own personal opinions aside about how with them warehousing, personal data, I think that they are going to pull back, just like every other stock in the world has will do. But I think that they are going to be just continue to move up and up and up and up and up. Last thing before I wrap up here, I want to send you guys another invite. Let me see. Hold on. Copy. There is my webinar this Thursday that I'd love for you guys to join. And then I'm also going to send you guys another webinar. We have that 3-day event coming up for Tyson that you just don't want to miss. Learn to Master Fibs, 3-day event with Tyson Clayton. Huge value is going to be brought there. So Look, guys, appreciate you all for being here today. I'm going to wrap this up now. Want to wish you guys health, happiness, and success at trading. See you guys in a webinar this week. I'm absolutely certain. And I will talk to you all soon. Thank you so much.